Hello and welcome to Crux Investor. We caught up earlier today with Joe Kaderavek. He's the CEO of Cobalt Blue Holdings. Now we do something different today. He actually takes us on site, gives us a run through their pilot plant up at Broken Hill. Truly fascinating. We also managed to get a conversation in about the macro environment for cobalt and where that's going, and how these guys fit in, their plans for the pilot plant and beyond, and how they're going to fund it. Really interesting conversation. Hope you enjoy it. If you'd also like to go and check out our private investment platform, cruxinvestor.com/club. You'll be able to meet other like-minded investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from judgment, trolling, and abuse. We've also got training courses on there to help you with your diligence process. We've got commentaries from experts from around the world on a variety of companies and other commodities, including our weekly uranium shows, nickel shows, etc. So do go along and join them there at cruxinvestor.com/club. We'd love your feedback too, so do give us a like, it'd be much appreciated. Leave your thoughts below, we'll get back to everyone. And if you want to see precisely what we covered today with Joe, do take a look in the description below.
Thank you, Matt, for that introduction. Let me take you through the plant and what we're trying to do here in a simple video. To enable a decarbonised future, we need batteries. Cobalt effectively enables these batteries that will create this future for us. Cobalt Blue believes in that future and has a unique opportunity in Broken Hill. Firstly, the ore type is unique. We have a large-scale cobalt in pyrite, and that doesn't happen many other places in the world. We have a lot of it. The mine itself will mine sufficient cobalt to enable over 5 million electric vehicles going forward. Every part of this process exists somewhere in the world, but we're the first company to bookend all of those processes together to commercialise the cobalt.
The process that we're proposing for the commercial scale operation, which we're replicating here in scale at the pilot plant, is that it's an open cut mining operation, crush and screen it to a coarse sand, which is much more cost effective compared to grinding in conventional mining technology. That sand is then separated through a gravity and flotation circuit to create a concentrate of the mineral. The mineral then goes through a number of steps to break it down, leach it, and extract the cobalt out of that mineral. The cobalt will be in the liquid phase, which then goes through the subsequent stages of processing to purify it and ultimately convert that into a battery-ready product.
Broken Hill offers the project a wide variety of advantages that other mining companies simply don't enjoy. Firstly, people. It's an established mining town of some 18,000 people. It's got mining in its blood. So the mine we intend to set up will be serviced and operated by people who already exist in Broken Hill. The skill sets, the experience that we need already here. The social infrastructure, the housing is already here. The other advantages are its proximity to power. So the mine will be powered by wholesale power, for example, renewable energy. The mine also has an allotment of raw water. It's also located next to a railway line and also located next to a main highway. All of those factors which are important for mines in their cost line are here, are prevalent. Another key advantage of our process is that we separate 80% of the waste from the ore at the very first step of processing. So our refinery, where a large majority of our cash costs are consumed, only sees 1/5 of what we mine. So not only are we not using a lot of energy, we're also doing it very economically. The efficiency of the process allows us to produce the intermediate MHP at around $10 US a pound. That puts us in the lowest quartile on a cost basis globally amongst our competitors. The Broken Hill Cobalt Project has a flexible production strategy. So we're going to produce both an intermediate product, an MHP, or a final battery-ready product, the cobalt sulphate. Different specifications for different end markets. We now have 30 partners involved in the battery industry or in various segments thereof who want to take our sample cobalt. They represent the vast majority of all battery makers who are intending to supply EV, electric vehicle batteries, or energy storage system batteries, utility scale batteries. We often talk about the Broken Hill Cobalt Project in very simple, high-level terms. It's large scale. It's a top 10 global mine. It will be, when production, a top 5 mine out of Africa. So it's a viable alternative to those consumers who are concerned about ethical sourcing. It's a long-dated mine. We're looking to produce 20 plus years at the equivalent of about 17,000 tonne of this final battery-ready product. For the local community, that's a generation of employment, and that's a very strong promise. The global focus on the project is simply outstanding. Investment in Cobalt Blue provides investors substantial leverage to cobalt, this enabling metal for the future.
And back to the pilot plant where we've got Joe Kaderavek and Adam Randall waiting for us. Good afternoon, gentlemen. How are you?
Good afternoon, Matt. Good to be here.
Hi, Matt. Good to see you.
Good to meet you, Adam. Good to meet you. What a spick and span pilot plant we have there. So this is the facility where you're going to be doing all the hard work in the next 12 months or so, is it?
Yeah, that's right. So we're launching into operations. We've successfully commissioned the plant. Over the next 12 months, we'll be generating some commercial samples and work with optimise the process.
Beautiful, beautiful. Okay, we're gonna talk a little bit more detail about that one, but first, just want to talk to you, Joe. There's obviously been a few events recently. Volkswagen, obviously, I think the one that sort of sticks out in the memory most. Just want to talk about market conditions. So we talked in the past about the macro thematic, but just for people who perhaps not, been following this story closely, Cobalt's had a bit of a sort of up and down ride over the last 5-6 years. So why should people be looking at the cobalt space now?
Yeah, that's a bit of an understatement, Matt. The cobalt price has been a white knuckle roller coaster ride in the last few years. Look, I think the cycle that we saw in 2018 was a preemptive cycle, preemptive in the sense of that there is a battery demand phenomenon coming, but it wasn't quite there at the time. What we're seeing today, and in the last 12 months in particular, post the COVID lows, has been a reassertion of pricing back to its 30-year normal, so back to around the $25 a pound level. What we're about to see, and I think that's in the next 18 or so months, is a much tighter market as this market, which I think has come upgrade on demand, starts to bare its teeth. You touched on VW earlier. VW is one of many data points we're seeing where large-scale OEMs in the EV space are pinning their ears back on production, on standardisation of production, and on creating a supply chain to feed that production. And as they do that, each one of those stepping stones means that the markets come upgrade. For example, prior to the VW day, I think consensus was broadly a 15 to 17% EV rollout by 25. The numbers we're seeing now are 25%. By end of the decade, that'll be 50%. That's a huge upgrade based on even 6 or 12 months ago, and I think that bodes very well for the cobalt market.
Well, let me talk to you about pricing, because as retail investors, even family offices, we find it hard to actually understand what is happening with the cobalt price. Not an easy price to put your finger on or gauge how it's going. Obviously, I think last 12 months, my sense is prices have improved, but where should we be looking to try and understand what is happening, reprice, and therefore, I guess, that whole supply-demand economic?
Yeah, look, it's a solid question. It goes back to something you and I have discussed a while ago. The LME is the publicly available, the easy benchmark for cobalt metal pricing. It does not represent the market. It does have some value as a trend indicator, but doesn't represent the broader market, just given that it's such few metal is held on inventory at any one time. Cobalt remains a company-to-company market, and that pricing's largely opaque. The way around it is to use the Metals Bulletin or similar pricing, which is a phone around to transactions that occur within a certain specification, so volume and quantity. That is published daily, but unfortunately for most investors, that's subscriber-only data. So by all means, get yourself a subscription, or you can wait for research to be pinned. With respect to cobalt pricing last 12 months, it's gone from a floor of about $12 US a pound metal to double that today, so around $25 a pound.
So where does that stand in terms of an average over the last 10, 20 years? Are we at the peak, or are we somewhere in the middle? I mean,
well, that's just bang on. That's bang on. The $25 US a pound is bang on the 30-year average. And if you bear in mind, most of that 30-year average didn't have any sort of battery demand in its profile whatsoever.
Right. Okay. So that's what we should be looking for. So let's come back to this Volkswagen day. I mean, what are the things that they were saying which encourage you as a cobalt producer, and what has, as you say, been a white knuckle ride roller coaster of the past few years? What gives you encouragement that what you're going to be producing is what they need, and are they going to need it in the quantities which you want to be selling at?
Yeah, look, two things give me encouragement. Firstly is the technology side. So both Tesla and VW mentioned a range of battery technologies, which are going to go into different phases of their passenger and commercial fleet. So at the low end, low range, if you like, the cheap end, there will be non-cobalt batteries, this LFP formulation, typically city commute style ranges. At the mass market end, there'll be two competing technologies, this high manganese battery, which to date is a laboratory wish, and according to our internal sources, at least the back end of this decade before we get any commercialisation from. The other competing technology, which is here and now, is NCM, nickel cobalt manganese, or NCA, nickel cobalt aluminium batteries, and they'll capture the vast majority of that mass market passenger vehicle. The other thing is scale. Tesla is trying to effectively own its own production chain upstream to the point of mining. VW have said, no, we want to control it. So we'll create an ecosystem through this unified cell battery of concept. What does that mean? It means they're going to build 240 gigawatt hours of capacity in Europe, which is, considering it's 8 today, that's a massive scale up. They're going to do that within the next 10 years. And they've said to their suppliers, are you in or are you out? And if you're in, you've got to conform to that technology spec and this particular prismatic specification. So all that means that they're controlling their upstream, creating an ecosystem that's friendly to them, reducing their economy or their cost through economy of scale. I think the world's headed to 4, 5, 6 of these different ecosystems. For example, GM and LG Chem have another battery variant called the Ultium. And I think with those 4 or 5 or 6 ecosystems, that will be the future come the end of the decade, and all of those will be beholden to cobalt.
So, but again, I'm trying to work out what the buyers are thinking at the moment. Obviously, we talk to a lot of battery metal companies around the world, and they're all telling us the big supply-demand deficit that they're seeing. But what are you actually hearing? What's the anecdotal evidence which says these guys are keen to nail down supply for the next 5, 10 years?
Okay, I'll give you two. One is 2 months ago, the samples that this facility and Adam and his crew are producing, we had about 10 or 12 partners who wanted product. Today, that's 32 and growing. The sheer volume of demand on that sample tells us there's underlying commercial volume. So that tells me that there's a real demand for a new project, a greenfield project, particularly of ethical cobalt. The other one is direct conversations with key battery manufacturers. I may have mentioned the last time around that one of the world's biggest EV producers in a conversation has revealed that they're now net short 23, 24 cobalt. So 6 months ago, they had fulfilled their procurement requirements. Now they're actually short because in the last 6 months, the EV makers have upgraded their procurement as well. So really what we're seeing is, I guess on a 22, 23 basis, we're starting to see some tightness. On a 24, 25 basis, we're seeing some real market deficit based on those anecdotes.
But are we? We're also seeing a lot of long-term cobalt supply deals happening as well, company to company stuff, right? So that's what we're reading out there. So doesn't that affect what you're saying?
Well, that's you and I are on the same side of the coin. What you're seeing there is company to company procurement, which is effectively satisfying their requirements for long-dated cobalt. So traditionally, the annual market that exists has looked out 1 year or so in terms of indications of quantity. These guys, which are in the public domain, the SKs, the Samsungs, the BMWs of the world, and the Teslas, are all looking at 2, 3, 4, and in most cases 5-year deals. I'd be surprised if the duration came in earlier, because these guys need to produce EVs on a 7 to 8 year forecast. So I actually think that duration will go out.
Interesting. I mean, you touched on something there, which is obviously, I think, what cobalt is most known for, which is the need for ethical sourcing as well. I think most people would connect cobalt with DRC, the world's largest producer, high grades, etc. But people are trying to move away from that. So people moving into investing in mining and investing in cobalt, those are one of the first things you'll probably discover. So obviously that helps that you're not sitting within the DRC with your conversations with some of these metal buyers, with some of these OEMs, etc. But is that a reality? Because we're going to need all the cobalt supply, aren't we, going forward? That's what you're saying to me. There's not enough of it.
Yeah, look, let me answer it two ways. One is the project we have here underpins an EV's production run of 5 million electric vehicles. So if you were to take all of the offtake from this project across the next 20 years, there's your first 5 million vehicles, which is an audacious number to start with. Ethical cobalt, high quality cobalt. We are also seeing the first of NGO style action in the DRC, where they're looking to create a cobalt fair style alliance, where we're looking to clean up some of the village and artisanal based production. That's all about working under sustainable conditions, not working underground under hazardous conditions, getting a fair price for their cobalt. We're starting to see some of that happen. So I think you'll turn some of the non-ethical ultimately into sustainable cobalt. I guess it's a question mark what really determines ethical cobalt. I think, as I said before, you need to appreciate these as people's livelihoods. So I wish the people in the DRC that artisanal source the best of luck, and they deserve to make a living from that cobalt. So if it can be, you can create a more sustainable and ethical outcome, I think that's a good thing. But those pressures are already there. But none of that answers your core question, is there simply enough cobalt to go through? And the answer today, based on what we're seeing, is there won't be, and therefore there will be a price rationalisation going forward into the batteries.
But this is why battery designers are trying to design cobalt out of batteries, isn't it?
Absolutely. I mean, it started off being a twin argument of ethical and cost. Now it's largely on the cost side. Look, there is a race to thrift cobalt. There's no doubt today's chemistry, which is largely transitioning to a 622 NCM, so that's going to be the mainstream next 12 months, will be accelerated to an 8.1, maybe to a 9.5, a half, etc. And all roads, in my mind, lead to a 4 to 5% cobalt content in the cathode over the next 4 to 5 years. That acceleration will help mitigate some of this supply risk. But even with all of that said, it's tough to see how that supply will be brought to the market that'll satisfy this scale of rollout.
I mean, so given that, are you seeing any changes in cobalt futures at the moment? Are people getting nervous about battery designs? Are people cognizant of, there'll be different use cases? So, like you say, the supply probably won't be there necessarily for all of these OEMs based on their predictions of what they're going to be needing.
Yeah, so interestingly enough, we are seeing now some long-dated cobalt futures contracts being entered into on the long side by some branded, let's call it branded battery and or EV makers. And effectively, they are long those contracts. These are cash settled because they're short the underlying. So they want to physically hedge their exposure on the underlying. So as you read about a long-dated contract between Glencore and X party, what you don't see is the underlying detail, but what you can see through the futures market is how that counterparty then hedges that risk financially through the futures market. And that's been a real phenomenon in the last 12 months.
Okay, so let's just, again, for people perhaps new to this, remind people what you've got there at Broken Hill. We'll talk about the pilot plant in a second, but outside of the DRC, not a lot of cobalt, developers. What have you got there?
Look, as a project, we have a very large and long-dated Cobalt Project. Large being at 3.5 to 4,000 tonne of metal equivalent. So that's about 17,000 tonne of this cobalt sulphate product, the battery-ready product. That's a top 5 global mine ex-Africa. That's a top 10 mine if you include Africa. It's a standout in terms of ethical jurisdiction, and that chain of custody all the way to the battery maker is something we want to participate in. It's low cost, so we're making, and Adam and the team here are looking to prove up a $10 cost or better at a US dollar per pound level for the MHP, and that'll put the project in the bottom quartile on a cost basis. So very, very cost competitive. On a CapEx comparison, this project is about 1/3 to 1/4 of any global peer because it's a pure cobalt focus. We're not making nickel, we're not making copper. We don't have all that capital cost associated with it. Or I might add, the inefficiencies of trying to process polymetallic streams. So we've got a bloody-minded focus on just the cobalt. We're very good at it. The plant you see here with Adam and the team running it is our attempt at a large scale and soon to be bigger scale to try and extract every last percentage point of cobalt and do that literally on a cost comparative basis with any mine in the world.
Right. So I want to come on to Adam actually, because he's the guy who's putting all that together. But just but before I do, one last question. You talked about having sort of 16 companies wanting to test your product. That's now up to, what did you say, 32?
32 the last time I looked at my inbox. But yeah, look, we're actually starting to run out of products. We have to make it, slice it up skinnier and skinnier for this introductory round. Yeah.
Right. Okay. But there's going to be companies in there which are going to be larger, more well-established, bigger balance sheet, be able to give you longer-term contracts that you're going to be focused at. But I guess in this environment, there's going to be a lot of new battery companies or intermediaries wanting to kind of step in and take advantage of the situation. So I guess you've got some choices to make at the end of this. But these people are doing so. Actually, Adam, tell us what have you built this plant to do? What can it do today?
Right. So this plant is primarily designed to run the process. The entire process has been modelled at the lab scale, and we've proven that it can work. We've built this plant to run that process at a larger scale, a more continuous scale, and the outcomes from that will be to optimise and prove up the robustness and the processing economics and efficiencies of that process.
Give me some numbers, Adam. I need to understand, because people talk about the need to build pilot plants and then they kind of work out what the economics are, and then they hopefully, attract the right sorts of partners. So, what are you capable of producing there? What is the process?
So in the lab, we've proven that we can see up around 90-odd% recovery of the cobalt. We hope to be able to model that on a more continuous basis in here. We've proven that we can make an intermediate product that's got about 28% of cobalt and 7% of nickel, which is a very clean product. And the cobalt sulphate that we've produced thus far is at similarly high grades.
So, Adam, I mean, you're talking about in lab conditions being able to achieve sort of 90% recovery rates, but pilot plant, commercial, it's going to be different. So what are the sort of technical risks that you see being able to produce consistently, that's Joe's word, at, higher rates? Are you going to be able to hit 90?
We hope so. The risk here is not about whether the process works or not, but it's in the fine percentages, whether we can achieve 84, 86, or 88% recovery, whether we're plus or minus 5% or 2% on our power consumption, what the residence time is in the leach vessels, whether it's 90 minutes, whether we can drop that back to 60 or sub 60 minutes for residence time, which has a huge knock-on effect on the overall scale of the future plant. If we can optimise the process at this scale, we can have a serious benefit for the future engineering of the commercial scale operation.
So this isn't about a technical risk. Then you're saying this is a case of just optimizing the commerciality.
That's right. Yeah, we're all about optimization at this scale, and that's part of the driver for doing a pilot scale plant first, before we then step up to the demonstration plant. We really need to make sure that demonstration scale plant works at the most optimal conditions that it can.
Okay, interesting. So, what are you giving to your partner? What are they expecting from you, and what are they doing with it when you send it? When they receive it, rather, I should say.
Yeah, I could probably offer an initial answer. Look, there's two scales of plant that Adam and his team will be building and operating. The first you see behind you is pilot. We'll be looking to make up to 150 kilogram of both the intermediate MHP and the final cobalt sulphate. They're purely for sample introduction purposes, if you like. Here we are, we're in this quirky Australian town called Broken Hill, which, by the way, is the home of Australian mining, if you haven't heard of it before. And here's a sample that we believe is commercial. And it's so late cobalt, we think it's a premier product. The second scale of test work, which is the demo plant, I'll let Adam talk to the demonstration scale shortly, we'll be looking to effectively ship up to 100 kilogram of sample per client. The big difference between the two scales is that the larger scale allows us to then pre-qualify on a supplier basis to those particular battery makers. And with that scale also is repeatability. So at the plant here, we'll have to make 10 kilos of MHP, and then another 10, and so on and so forth. And once you've made 6 or 7 of those, and they're all identical on the assay and they all meet spec, then your qualification's really only just begun. Then they start auditing you technically. They start auditing you in terms of your ethical credentials. They'll send people here to make sure it works. They'll send people to the site on the mine. All of that is done typically today before you pre-qualify as a supplier. And all of that can take 12 and in some cases 18 months.
Right. So why should investors get excited now if it's going to take 12, 18 months? Why should we be looking at you guys?
Because that's a simple example of one commercial partnership, if you like. That's the textbook approach. But against the backdrop of significant market deficits, how many of the larger players do you think are going to wait to the 18-month process to make sure that all of their audit as samples are in order, or audit processes in order, before they come and put a foot on some offtake or a foot on the project? It's really about providing enough proof of concept, starting today with this plant, that will give confidence to project partners to come in and make those investments. I'd put it to you that we're going to get a fair bit of interest right here and now with this scale of production, and that will only build. I can't think of too many partners who are going to wait to all of the end of that process, to the end of that process before they start galvanising some action.
Right. And okay, if you don't mind, so what would that shorter process look like? I mean, how many samples would they need to see? When do they start sending people down here? Because you're painting a picture of there's not a lot of ethical supply out there. You're one of the top 10 projects in the world, top 5 outside of Africa. Surely people should be lining up at the door with you. But what's the shorter process you've got to get through to kind of get them to, come visit the plant, for instance?
Yeah, so I'll just preface my answer by saying the world is replete with failed metallurgical processing. So there's umpteen number of projects globally that have some smidgen of cobalt in their production base that are knocking on the doors of these battery makers. So I'm not surprised that they're cautious. I'm not surprised based on their history that have invested significant capital and at times have come up short on the processing. What you see behind you is our direct attempt to answer that. What scale of proof do these guys need to get excited about our project? What does that look like? It means them receiving the sample and saying, this is interesting, give us some more. We'll have to see how much additional product we can make, and again, repeatable product. Bear in mind, demonstration scale plant is coming in Q1 next year. We're looking to commission that this year. So once there's sufficient scale, and that could be a handful of samples, we can start to enter into negotiations with partners that preempt success. In other words, preempt a successful demonstration scale, but talk about commercial transactions today. And that's really where we're at today with already a handful of partners in discussion.
Adam, have you got the money you need to build what you want within this pilot plant? Are you going to be able to get it done?
Absolutely. With the pilot plant, we've already done it. We've got the money required for that and operate it. The purpose of building the pilot plant is it's much better to optimise the process at this scale. That just gives us a greater confidence that when we build the demonstration plant, that it'll be closer to a turnkey operation. We can build it with confidence. We can operate it. We know what the outcomes will be, and that'll give us the freedom to concentrate on the other technical and commercial samples that are required.
Okay, and with regards to the demo plan, I know Q1. I mean, it's 12 months away, but that's not that far in the scheme of things. So what happens here? Is it a modular affair? Is this, or do you go and build or buy another shed and kit that out? How does it work?
It'll be a kind of an upgrade, an extension to the equipment that we already have installed. The equipment that we've installed at the moment has a relatively low level of automation, quite a good degree of data collection instrumentation in it, but it's more designed for small batch-wise operations. The demonstration plant will be expanded compared to where we're at currently with additional pieces of equipment to allow us to run on a continuous basis, but also at an increased throughput rate. So we'll be able to generate much higher volumes of samples in a relatively short period of time.
Okay, and so just in terms of a little bit of finance, if you don't mind, is to build that, you're going to go and need to raise a bit more capital, are you?
Yeah, so look, we're fully funded through pilot plant, as Adam suggested. Right. So that's 30 odd partners with sample out there. In terms of what we've got on the balance sheet, we've got about 7 million Aussie dollars on the balance sheet at year end, and we'll be looking to come to the market some stage Q2, Q3 to get us through demonstration scale plant. But we'll be very opportunistic because I think the self-help here is very strong. The ability then to hopefully convert some of these sample partners into real project partners. But I also think the backdrop, the macro is very strong as well. So in both cases, the trend will be our friend, and opportunistically we'll come to the market as needed.
Right, okay. But that will be helped if you do have a project partner. Raising capital when you've kind of got a piece of paper, more than an MOU, more than an LOI, something meaningful. So does that give us a clue to the sort of speed that you were talking about with regards to this shorter process?
Yeah, careful what you wish for, Matt, because if we're successful with a partner, it may well eliminate the need for a capital raise. Now, let me be very, very specific, because a lot of people watch these interviews. If we're successful, it may alleviate, if not eliminate, some of the need for future capital raise. And so if you are successful, a project partner can come in and that takes the burden of the capital requirements off you. If you're not successful, but are still in strong discussions, you can then mix that up or rely solely on an ASX or equity style raise. So our optionality grows as this pilot plant is produces and sample partners are contacted.
Okay, but that's a process you're going through Q2, possibly Q3, but at your election at this point until you feel comfortable about the options on the table for financing.
Yeah, look, I've had a plentiful discussion internally, and we're just going to be opportunistic as to where we go. I think we've set ourselves up with a very strong tailwind. And one of the things, if I could just add, Matt, is we focused a lot on the upscaling of this plant to demonstration scale. But more recently, we've announced to the market a cobalt in waste streams project, which is our ability to do much smaller scale test work in other jurisdictions.
Well, this is one I talked about, because that came out just the end of March, 31st of March it came out. I did want to talk to you about that one because I'm intrigued, because you're going through a process of proving what you've got at Broken Hill, and then you seem to be talking language, slightly confident language, I don't know if it's overconfident, of looking at waste streams from other projects. So what's driving that? You think you've got some sort of USP in terms of your technology, or you've got capacity? I mean, shouldn't you be focused on one thing at a time?
Yeah, look, I think that's your classic dilemma. Do you leverage out your intellectual property, or do you just focus on what your core knitting, which in our case is the Broken Hill project? The plant behind us is effectively a $3 million key to unlock some of the key processing challenges. But the plant behind us allows us, without distracting from Broken Hill, to do smaller scale test work. In your camera shot, and Adam can point out, do you want to just talk through the POX reactors and the fact that there's...
Sure. So I guess to circle back to your point, we are kind of focused on that one thing, which is proving the Cobalt Blue processing technology, and we're looking at alternate feedstocks. The plant is currently configured for the Broken Hill Cobalt Project, which will take material at that production rate. The heart of the processing technology is this bank of autoclaves, pressure oxidation reactors. For the greater project, the Broken Hill Cobalt Project, we'll utilise all 4 of those. For the demonstration plant, will actually expand and extend this train. But for the smaller scale operations, we can isolate these and we can use them independently of each other. So we can then carry out small scale testing using the same equipment, using the same process, but proving the robustness of that processing technology as it applies to various feedstocks.
So what's the demand out there? I mean, how have you got into this? Did people approach you, or are you just hedging your bets? I mean, how does that work?
So in the last 3 years, we've had 4 partners, 2 in the local Broken Hill and South Australian area and 2 up in Queensland. Starting with Queensland, that's an area that's mined more cobalt historically than we have in resource by a great number. Most of their cobalt has been locked in pyrite or pyrite-like structures and has gone straight to tailings or waste dams. So historically, it's been too hard to process. It goes into a waste stream. Our project, or our process, I should say, has been tested on 2 of those particular ore types, and it readily shows recoveries of around 88, 89%, very similar to what we've got at a bench level with ours. Because it's already mined, it's already in a waste form, you can take a third of our cash costs away to make a similar product from a waste stream up there. The other thing to point out is the government in Queensland wants to get rid of those acid-forming messes. In fact, there's a number of initiatives at a state level that will help us go in there and create some test work positives. In other words, we're going to go up there, try and grab ourselves 30 or 40 kilos per particular deposit, come back down here. On this small scale you see here, we'll run small scale test work. It's all about understanding if the process can be used for that particular style of waste in that particular location. We can comfortably, whilst we're building demonstration plant around it, do the smaller scale test work, or even once demonstration scale is in production, provided that unit of operation is not in use, we can still do that smaller scale. So it's conceivable we'll have multiple small scale, we call it bench scale test work in progress for our cobalt in waste streams project, whilst running our demonstration scale proof for the Broken Hill project. We also have other partners in South Australia, for example, the Carrapateena mine, that's part of the Oz mining stable, Oz mineral stable, I should say, where we've done successful test work to date. And it's conceivable that further test work with that partner may involve a pilot plant scale test work. So we can engage at bench scale, 40 or 50 kilos, pilot scale, 50 to 100 tonne, demonstration scale, 2, 3, 4,000 tonne. All of that can be done more or less in parallel with some smart planning from this particular operation.
So talk to me about the scale, because you've got a few different types of partners. You're talking about at state level, and then you've obviously, presumably other companies thinking, well, what can I do with these? Are they effectively tailings? Is that what we're dealing with?
They're waste streams or tailings. So in some cases, mine is in production, so it's bringed out, so we could take that product live. In most cases in Queensland, in Mount Isa and Cloncurry, these are tailings dams, some of which are 100 years old, where they put their pyrite to one side because they just couldn't process it.
Right. Okay. So give me a sense of the scale of this. I mean, how many of these waste streams, these tailings, are sitting at surface ready to go? I guess you're not going to be the only show in town, but at least you're at the table.
Yeah, look, we've had a technology bake-off, if you like, with a number of other process flow sheets. Our process has some positive and also has some negatives, as they all do. But overall, in terms of leaving the site with the least acid potential, in other words, we can clean it up, this process does not have any other peer. That's not to say it's bulletproof, but in terms of environmental cleanup, it is a standout optionality. In terms of scale, look, there's thousands of mines, abandoned mines, tenured mines up there, out of operation, in operation. What's our process applicability? Look, I don't know, 30%, 20%. it's such a large denominator that even a small applicability represents huge upside. We've done our own internal research, and there's 200,000 tonne plus of cobalt locked in tails in Queensland on publicly available data. Now, in the ground here at Broken Hill, I've got 80,000 tonne, and on a good day, I can imagine that going to 90 plus. So in Queensland, sitting there no more than 40 or 50 metres below a surface level is double my resource, awaiting us at 2/3 of our cash cost to produce.
Okay, so that's obviously worth going after. That we're talking about some very meaningful business there, but is that a distraction to you financially in terms of your ability to get this pilot phase finished?
No, actually, I think it leverages on the strength. So if you think of a project, under the JAW code, there are these modifying factor categories, of which off the top of my head is about a dozen, geology, metallurgy, political, environmental, stakeholder, all these different feasibility studies which make up your overall FS. This is one part, one of those modifying factors. This is processing. Now, don't get me wrong, this is a really important part, but it's one part. Within this one part, I'm talking about capital that's already been spent. And all we need to do now is run it effectively so we can do multiple projects from this one plant. I'm as excited about the Queensland and South Australia as we are for our core project at Broken Hill. But basically, it's sunk capital. There's probably one or two operators that'll be hired to create the arms and legs for that small-scale test work. We need a geologist at the front end to help us find where these deposits and these tail streams are. But the rest of it is in front of you. And I don't think it's a distraction at all. I think if we can create a second and third arm to the Cobalt Blue business, I think that's tremendous value add.
Yeah, I guess, I mean, a process like that, you've got to go through someone else's process, right? You're testing their stuff, kind of the reversal of what you're doing at the moment with your own product. So what is the timeline for something like that? What are the hurdles? What is the bidding and tender process?
Okay. Look, it's a good question. So I think let's split opportunity sets in waste tails into one is untenured tenements, in other words, abandoned tenements that are on the government register, and then two commercial tenements. Where they're untenured, I think the hurdles to entry are pretty straightforward. We've already had some discussions. I need to be cautious of revealing too much, but some discussions with respect to taking those samples and then running them here and understanding what the upside is. The government's view is get rid of the acid-forming mess, and then let's talk about the economics once you can prove up the process. I think the time to market there is pretty quick because there's really no hurdles and you've got the regulator that's aligned with you. Where it's tenured tenements, sure, you've got a commercial negotiation, but imagine the strength that we have when we knock on the door. Hey, we can take this through no cost to yourself, run a sample program at 20 or 30 kilos, come down and have a look at it, come and meet Adam and the technical team to prove up that the process is alive and kicking. If that proves up, then the first economics prove up. Once those economics prove up, we can then start to have a commercial discussion over what that project would look like. But also picture from our side, we can modulise this approach, divest it to Queensland. They've got a main gas line there, so energy is relatively plentiful. And then we can work our way from site A to site B to site C, effectively hoovering up these tails down and producing this product. So I can't give you an answer of what that timeline looks like in those commercial discussions, but I can tell you when you're competing against yourself to try and develop these waste streams, it shouldn't be a difficult conversation.
Yeah, you'd think. So the untenured one, I guess, a different set of economics from the commercial ones, because the state's concerned about a cleanup exercise. I'm just trying to think of, in terms of your green credentials, I guess this extends those when you're talking about funding for things like a commercial plant.
Yep. Yeah, look, the timeline, if a project's in operation and they've got a license to operate, the timeline to produce a feasibility study for that particular opportunity, given that the met's here and we can turn that around sample base 2 to 3 months, bigger base, it's maybe 6 months in terms of test work, that turnaround's incredibly quick. If you try to do that level of test work using laboratory facilities around Australia, and I'm looking at them as I say, if you try to do demonstration scale you'd be there for years. You probably wouldn't even do it because you couldn't commit labs to that scale of work. So our ability to turn that around quick, create a feasibility study with real economics, and then enter into those conversations, that puts us in a pretty strong position.
I mean, it's interesting. Sorry to go on about it. I was intrigued when I saw this waste streams project announcement, because I just wondered what that would mean in terms of your ability to produce, a meaningful volume of product. The cleanup bit I get, I can understand the benefit of that, but what would that mean to your output numbers? I guess at this stage, way too early to say, but the optionality is there.
Well, I think the fact that there's twice as much cobalt in tails just in that one jurisdiction as we have in resource.
Wow.
Lends itself for you to speculate what the upgrade is. Look, my vision for this business is that it has multiple assets. The core flagship is what you see in front of you, but the ability to transpose this intellectual property into other jurisdictions is very, very strong. And to put a second and third project underneath our banner with a commonality of IP, I think is a very strong proposition.
Things just got very, very interesting, Joe. Well, look, I appreciate the update, and I know you're up there, and I think there's a shift change happening in the background, so there's a little bit of background noise there at times. But I appreciate your time today, and Adam, lovely to meet you, and actually see what you built and are building up there. So thanks for that, and Joe, stay in touch. Fascinating, especially a Q2, Q3 decision on a commercial plant.
Perfect. Thank you. Thank you, Matt. I appreciate the opportunity to speak to you again.
Thanks, Matt.